Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of the mission, we do these free mentoring roundtables every week. And for year after year after year, starting in 2008, we have done this. This is the 489th session. We started back in the fall of 2008, and we've had over 150,000 people participate. The event is being recorded. You will find recordings of every single roundtable on the 1M1M Roundtables channel on YouTube. On Twitter, we are at 1M1M and at Stromana. You're welcome to follow us there. If you're live tweeting, today the hashtag for that is 1M1M. This is a roundtable, not a broadcast. We have some scheduled programming first. We have an investor interview as well as 2 entrepreneur pitches, but then we would like you to participate as much as you wish to. So I'll put the slide back up when we're ready for that, and you're welcome to dial in. And throughout the session, you can use the public chat to interact, ask questions, etc. Let us start today's conversation with Vincent Diallo, Managing Partner at Interlace Ventures. Vincent, welcome to the show.
Hey, hello. Thank you so much for having me. It's a real pleasure.
Great to have you. So let's introduce you to our audience. Tell us a bit about your background, how you got to venture capital, and tell us a little bit about Interlace Ventures. What is the focus of the fund, and whatever else you want to share in terms of check sizes that you like to write, what stage do you like to invest in, and so forth. Let's get to know each other.
Sure thing. My investor pitch, basically. So my name is Vincent. You will very quickly notice that I'm French with my accent. I'm French. I'm based in San Francisco. I've been investing for 5 years now. And the latest vehicle is Interlace Venture. We launched it last year with my partner, Joseph. Joseph is himself also French, and he's based in New York. So French, active on the US market, but we're actually coming from China. So after I said that, you realize that it's a little bit an unusual journey on our side. We are actually former operator in retail. We met at a negotiation table in China when I was the CFO of a trading company that we exited. And Joe was working for famous mineral water brand called Evian. And we met at that negotiation. So that was the beginning of a friendship that turned out to be a business partnership. And now I would say we are fully partner in crime, brother for Interlace. What happened is that the entrepreneur used to work for in China. After we exited the company, moved to New York and called me over to manage his investment, basically, in startup. At the beginning, that was just it. That was a blank page. It's like, you want to invest some money in startup tech for me? And that's how it started. I invited Joe to join the adventure, and we developed that investment capacity of what was a family office. It was called Bleu Capital. We did 11 investments with this one. There was for us a proof of concept, a way to refine our positioning, where we could really bring value to the ecosystem, because needless to say that even 5 years ago, I don't think the ecosystem was needing a new micro VC, put it this way. So we had to identify a relevant angle and a meaningful strategy that was quite aligned with our strengths, our background, our access. And that's what we did by focusing on retail technology. So it was not that obvious in a very first year, but it came very naturally down the road. So 11 investment with this family office, most of them in retail technology. That gave us momentum to launch Interlace, spinning off our activity, launch Interlace, and being backed by this family office, but also I would say families that have extensive operation in the retail space. Different families.
Okay.
So that give us the momentum. Yes.
So within retail technology, what is your geographical footprint? Where would you invest, and what are the constraints?
So we invest mainly on the U.S. market. Let's be clear. We even have a preference for New York area and Bay Area. Generally, we say 75% of our investment in those regions, and we remain 25% opportunistic. For the rest, I would say of the U.S. territory, but I would even increase it to North America and maybe to the world. Let's be honest, we can be opportunistic, but our focus is primarily those two regions. And the main reason is to be close to the founder and have dynamic interaction, because this is what we believe we have some value add. We are very founder friendly, not intrusive, but we're very happy to help and support where we can.
And what check sizes do you write?
We range it from 50K to 500K with a sweet spot at 250K. So definitely pre-seed, seed, without a necessary lead position. We're very comfortable to be the, let's say, the industry expert that brings this angle to the table.
But do you also lead?
No, we don't have to. We don't have to. It's not a must.
You don't have to, do you, or do you not lead?
We led a few rounds, but I still consider we are on a learning journey in a way that we've been investing for 5 years. You know, the learning cycle of VCs is pretty long, so I'm still happy to learn from the best practitioner and following a strong lead. So it's not a must. We can lead. It's not our fight. Put it this way.
Okay, let's double click down on stage. So how do you define pre-seed? How do you define seed where you're comfortable? Do you need a proof of concept? Do you need, what do you need? Do you need paying customers? What do you need to feel comfortable to write a check?
Generally, I already invested on a PowerPoint presentation, so I don't need much in terms of advancement of the project, and that's probably the position of any pre-seed investor at that stage. I think a meaningful vision on a significant market with an excellent team are always good elements. What I usually add and request is to have at least a grasp on the product, maybe not a grasp, but a demo to understand, at least validating their capacity to execute and present clearly their vision. So that's generally what I ask. But the main criteria for me is the market size, the ambition, and the excellence of the team. Yeah.
Let's talk about some of the companies that you have invested in. And as you were describing a few of these case studies, talk about how you encountered them, when you encountered them, what stage, what did they have, and what did you see that convinced you to invest?
Well, I'm not going to go through all the portfolio because totally 17 companies.
No more.
So just a few examples. I think some that are representative of our approach. With the family office, we backed a company called Cargo. and that was, let's say, a surprising concept, because those are the guys who tried to create a commerce experience in Uber. So I don't know if you had the chance to try it, if you are a frequent user of Uber, but until very recently, when you enter the Uber, some of the Uber, they went up to 30,000 cars actually equipped. You had a cargo box, which is basically a plastic box with some products inside. Products of three categories: food, snacking. You also had some personal care products and small electronics. Most of those products were for free. And so there was, let's say, a channel for brands to engage with potential consumer. So it was the beginning of a commerce experience within the car. And why I wanted to mention this one, not only because it performed pretty well until I would say the recent change of the dynamic in that space. But what I thought was important, or let's say noticeable, is the fact that why we were convinced from day one is because, again, as former operator, we actually tried. When we were operating in China, we tried that channel of distribution, and the fact is, China is slightly ahead in terms of digital consumer experience, and it's also a culture or a country that embrace change very quickly. So we saw the takeoff of the sales in such a space. Let's say the engagement of the user in such a solution. And so when we were just missing the technological solution to monitor it properly in China. So when we saw it in US with the proper technology, that was basically a no-brainer. That was clearly a very risky venture, and I think the first rounds were not that easy for them, even though on the end it was oversubscribed. But for us, it was obvious at the first discussion, just to have to confirm that the team was able to execute, and that was also the perfect combination, because they were looking for VCs who had a little bit experience in inventory management, supply chain, basically moving products, which we have a pretty good expertise on this. So that's one good example I think can highlight our approach and our different way of maybe enriched way of thinking of retail, because of the observation of different market maturity and market structure between the European, the Chinese, and the American market. That's one example. Maybe I could mention also Singuli. Singuli is an investment we did in January, team between New York and France, active in demand forecasting, with the first angle on fashion, but it's also touching FMCG somehow. Same, we suffered this pain as operator, used to let's say living 6 months in the future in terms of purchase and trends on a very fast growing activity, and we know how the risk that can express in dead inventory in terms of performance of the company. And so one of the permanent question was, how do we improve the quality of our forecast? And so when we saw that was super obvious for us that there was a need of support. What we did for them is that, exactly in line with our approach and positioning, something that I did not mention is that Interlace is not only focused in terms of investment space, but it's also verticalized in a way that we try to have strategic LPs around the table, meaning that they have an interest in helping us to accelerate the portfolio. So it's potentially business opportunities for the portfolio and that create additional value. So we introduce Singoli to many brands and retailers who could benefit from that. Same for AlgoPix.
And I'm sorry, I didn't quite understand. What does this company do? What is the value proposition?
It's demand forecasting. So it's basically anticipating the amount of sales you will have in 6 months, 12 months on SKU by SKU, including new SKUs, enabling to optimizing your inventory level. I could have exactly the same speech about AlgoPix, which is a company we invested in November, which basically is the Nielsen of marketplace, because they have lots of analytics and insights on transaction on marketplace. I think it's the most complete set of data on transaction on marketplaces. And in this logic of interlacing, we make a point to bring them additional business through our connection. That is also a pretty strong element for founder to choose us, because I'm convinced that good founder choose their VCs and not the other way around.
Let me ask a bit of trend question. Given where we are right now, retail is one of the categories that is going through a really horrible moment. With, of course, e-commerce is doing very, very well on the counter side. Fashion is doing terribly. How do you parse the post-COVID world, and how are you thinking about your companies, both the ones you have invested in and what you want to invest in going forward?
So I agree with the first portion of the analysis. Of course, COVID has been really damaging many retail operations, but at the same time, it's a tremendous acceleration of the digital transformation.
Yes.
Having invested on those trend lines for a while, for me, it's only good news. A good friend of mine is mentioning that we've been through a 5 years acceleration in 5 weeks, so 5 years in 5 weeks. And yeah. For me, it's actually seeing companies being ahead of the projection in terms of simply revenue, because there's definitely a need for those new tools. I mean, so there's an acceleration on the digitalization of the space, and I see, of course, even more potential today for some technologies that present new ways to engage with the consumers, new ways to relate to the consumer, new ways to serve the consumer, new ways to propose exciting experience, innovative experience. So video commerce is obvious that is growing. We see, of course, a lot of opportunities in last mile. We have one position in last mile that is quite exciting. It's called Cargo AI, again, a cargo, but not the same. Delivery in trunk. I'm actually super bullish about the space in terms of innovation in the coming years. And I mean, we're not going to stop consuming. Of course, consumers' behavior adapting very quickly to this new environment. No real idea on how deep will be the change. It seems like on the market that already totally reopened, consumers are quick to go back to their previous habit. So let's see how deep is this change. There's still no idea on whether we're going to have a second wave or not. I mean, there's still many uncertainty to really measure the deep impact. What is sure is that digitally speaking, I mean, from a digital perspective, there's clearly an acceleration, and of course transformation of the offline experience, which goes exactly in the direction of what we've been advocating over the past years. I mean, the convergence of offline and online. I'm not even talking about omni-channel today. I mean, it's just table stakes. I mean, it's not even a question of how to be omni-channel. It's how to make sure that we offer all the possibilities to the consumer to have the shopping journey that satisfy them. There's one shopping journey by consumer, so combining offline and online. How do you make it the best, and how do you follow your consumer to deliver him the best, fully personalized experience? It's that question, and that goes to technology.
The only point I would make is that omnichannel, yes, but I think COVID has changed the dynamic to be the weightage being much heavier on e-commerce and online shopping. And if you have to choose one channel, you need to be digital enabled more than the local and physical. So I think this is a very big shift, and as you said rightly, I think this is a 5-year shift that has happened in 5 weeks.
Well, I would not be that assertive because I think it really depends on category, category of product, category of purchase, and we should not also reduce the evolution of the mindset of the consumer. Obviously, at least with COVID, but it's not new. It's been again accelerated with COVID and shelter in place. We see expression of willingness to go to a more conscious shopping. It's more local, more sustainable, with a reduced carbon print, maybe even a return on, let's say, not a glorification, but let's say an appreciation of the effort, which is maybe not completely aligned with this search for convenience. So again, depending on the category, opportunities can be offline, online, and again, each shopper should have the possibility to choose the shopping journey that is convenient. I mean, suitable.
Yeah,
for
but there are some macro trends, like I think some 30,000 stores between JCPenney and Macy's and so on and so forth are closing this year alone. Mm-hmm. That's very big. That's just from a store footprint, survival of the malls, and so forth. These are very, very big trends, and these are irreversible trends, I think.
True, but this is nothing new here. I mean, we've been talking about retail apocalypse, or we heard about retail apocalypse for at least 3 years. I tend to see it more as a retail renaissance. There was obviously an overcapacity of commercial areas in US. I mean, if you compare to, for example, to Europe, it's 5 times per head. So of course there was a call for rationalization at some point, and I think again the crisis has just been accelerating that. So looking for.
Well, I've been in the fashion industry. I ran one of the first ever e-commerce companies, fashion companies. And I always thought that these big departmental stores full of inventory that is very hard to find anything is an incredibly inefficient model.
Exactly.
So no surprise to me that model is failing. So you can do personalized stores in an e-commerce context, and you can manage inventory. You can, forecast better. Everything is much, much more manageable in an e-commerce context, and I think that whole digitization of the fashion industry has taken very long. It's surprising how long it has taken, but I think it is accelerating now.
Totally. I mean, clearly totally accelerating. Now it doesn't mean that the physical store has completely lost its relevance. You have a couple of models that still benefits, even being fully digital. I mean, not fully, but mainly digital, still benefits from a physical presence. And it's actually see the store, I mean, the physical store, as a potential media channel where you can engage.
Well, and also maybe a physical fitting room, but you actually do the selections online, and maybe the merchandise gets delivered to a physical space for you to try it on, and so on and so forth. Some variation, but I think it's going to change. It's going to change significantly.
Definitely, and for the good. I noticed your background on fashion. I was like, you were so ahead. I mean, you were so, visionary.
It's way too early to do that. Way too early. That's a separate conversation.
I love to. We
All right. Well, enchanté. Merci pour votre participation.
Thank you so much for the invitation. It's a real pleasure, and really appreciate what you do for the ecosystem, Fermanagh. You've been here for a long time, and definitely it's a structural support, and happy to join you in that strategy.
Well, take care. We'll talk later.
Thank you.
Bye-bye.
Bye.
Folks, we're going to switch to the entrepreneur pitch section. Just want to set some expectations whether you're pitching today or at a follow-on session. We are completely on your side. This is a safe working session. We have no other agenda but to help you move forward in your journey. If you disagree with me, that's fine too. It's your venture. You just get to decide what you want to do. Remember, not all businesses can raise money, not all businesses should raise money, and raising money doesn't guarantee success. Let's get started. Sunil Ravipati from Santa Clara, California. Sunil, please unmute your line and tell us what you're working on.
Sure, Sama. Thank you very much. Good morning, good evening, everyone. I'm Sunil Ravipati, based in Santa Clara, working on intelligent insights solution. And this is my profile. I've been in the Bay Area for the last 20 plus years. The problem we are solving is essentially a lot of the providers, the hospitals, they see the patients, inpatient especially, they get readmitted because of infections when they are there originally for some kind of treatment or some kind of surgery process. So these infections cause the CMS, the Medicare Medicaid agency, to pay for these inpatients to the hospital, and that causes readmissions for the hospitals as well as dollars of fines to the hospital by CMS, because CMS wants to make sure that there is a very good care and provided to the patients so that they don't get readmitted often. And that's the market opportunity is huge. So can you please move to the next slide? So there's a huge loss to CMS, which is in the tune of $26 billion. And CMS is going to fine, penalize hospitals of about 3,000 this year. And this is a curve which you see that on the curve, there is a worsening performance of these hospitals in terms of the readmission rates. And every year, each hospital has to pay a fine for readmission, which is in the tune of millions of dollars, and accumulated all over the country is billions of dollars. So this is a huge market opportunity for someone like us to come in and solve this problem for the hospital providers, and as well as the insurance companies who can package their insurance affordability to the patients. Next slide, please. So the solution we are coming up with, we have come up with essentially do data collection of the patient records. So we essentially get the patient record from the hospital as per the HIPAA compliance and regulatory requirements. And we analyze the data, and we also integrate with their existing system, the patient mobile as well as the hospital mobile systems and other devices such as pacemakers and so on and so forth, which interact with the patients. And we also look at ensuring that there is a very good integration between the on-prem and on-cloud deployment for the hospitals themselves, so that it's low cost of integration for them. Next slide, please. So our architecture at a high level looks like this, where at the left-hand side, you have a user or admin of the hospital who can pick a template. Because we come as a platform, it could be for healthcare or any other segment of market, and they could pick a regulatory template. It could be HIPAA, and then we would get the data from the EHR, that's the electronic health record of the hospital, and we would process the data using machine learning model. So essentially, we are learning on the historical data of the patient to identify the infections. And some of these infections are specific, such as CAR-T and CLABSI. And these infections could also be extended to COVID situation for a patient as well, to identify if the patient is susceptible for a COVID based on the symptoms of the patient. So we would create the model and predict on the model essentially who are the high-risk patient versus low risk, and based on their variables, varying conditions, including age, whether they're diabetic or non-diabetic. And then we would store it into the system, and we could go with different display routes. Next slide, please. So this is our solution, and the predictor variables we picked in identifying the high-risk category of patients are some of these variables, and it could also be extended. So at a high level, it could be the patient's age, diabetic condition, pyruvate levels, bacteria present, and how many days a certain line was inserted into the patient when they were in the hospital, and for which, whether it's a jaguar line or femoral line, and so on and so forth, and what kind of routine bathing, sanitary levels were used on the patient. All that would factor in, and we could also explain it to the supplements the patients are taking. Next slide, please. So this is a code example and explanation of how we synthesize the data essentially to identify based on the training, based on the data of the patients. And our system would take the data. It could be in any format. It could be a spreadsheet format or a different file format, and we would read it in and generate models. Next slide, please. So some of the models we have generated are a neural net model, a decision tree model, and the model would come out with a model image. Sorry?
What data set are you using to build all this?
Yes. So we have a collaboration with an existing provider in South Bay here in San Jose. And we have initially created our own data set with input from the advisor who is part of the hospital, and use that data set to predict. And then now we are working with the real data set. So essentially, we used a test data set initially, which was created by our own team to essentially mimic or mock the real data set as close as possible. So yeah, thanks to moving to the business model. So how do we monetize on this? So essentially, we would monetize on the data we are analyzing of the patients, number of patients, And
So your customer is the hospital?
yes, so our customer is a hospital, and we are also got interest from insurance providers as well. So we would say both hospitals and insurance providers.
And what is the current situation? Do you have some hospitals who are using the product?
So right now, we are in a private beta with a hospital, one of the biggest hospital who's part of HCA network. So they have sites all over the country. So our market entry is through this provider, through this hospital, and then expand into their network and move across networks. That was the strategy we are approaching in that. And
How long does it take to finish a proof of concept with a client like this?
Proof of concept, I would say the timeline mostly is consumed in the data acquisition because a lot of the times we have to request specific data set in terms of the attributes we need, and that takes certain time. So I would say proof of concept is about 3 to 4 weeks once we get the original data set. But what we are doing is we are using our own data set right now, which mimics the original data set to a very close extent.
That's not my question. My question is, how long does it take you to get paid?
To get paid, it would take about, I would say, once we get past the proof of concept, and then when we go into doing the real data analysis and have a contract signed, I would say from 3 to 6 months.
So the proof of concept takes 3 to 6. The sales cycle, how long does it take to close a proof of concept, like to get the permission to do a proof of concept? Is that a 3-month or a 6-month cycle?
That's a 3-month cycle.
3-month cycle. And then another 3 months to finish a proof of concept to get a full contract, or
Yes.
6 months?
Yeah, another 3 months. I would say 3 months in a good, I mean, like a pre-COVID situation, but probably now with COVID, where hospitals have more focused on the COVID patients and the conditions with shelter in place and other regulations would probably extend to 6 months.
Okay. And is it a paid proof of concept?
No, right now what we have with our existing customer is we went with initial non-paid, but in the next customers we are going to talk to is going to be a paid proof of concept.
So I'm looking at your milestone revenue and growth. It looks very aggressive.
Yes, because the target size of the hospitals we are looking at is essentially the big hospitals who have been paying fines extensively year over year. So that's the pain point we are seeing, that it's eating up their bottom line as well as eating into their revenue, especially the.
Do you have 10 proof of concepts currently happening?
Yeah, so this is one which is happening with our provider here in South Bay.
10? You have 10 proof of concepts happening right now?
Sorry, no, not 10. How many you asked? Right now we are at 1 because that's where we are. We would like to focus on one at one time, and based on our investment we are going to raise, we can then scale it up parallelly to multiple proof of concepts.
If you do not have 10 proof of concepts happening in June of 2020, how do you get to 5 million in revenue and 10 customers in 2020? It's not possible. Mathematically, it's not possible. No amount of investment is going to make that happen.
So this is the projection we had by year end. So as I mentioned earlier, one of the customers we are working with, they are part of HCA. So HCA has more than 10 in the network. So essentially, based on the HCA network, is the decision, is the projection made that because we have from the leadership team of the site we are working with that they would be introducing us to uh, the other sites in the network, so which is going to happen soon. So that's the projection we made because we are already inside the network and we could go to multiple sites, which could be more than 10.
Does that mean that they will go to straight deployment and they won't require individual POCs, or do you know that?
Yeah, I mean, that would be a much faster. They would require individual POC, but we'd get the referral from one of their sites. So that would give us a faster turnaround in terms of closing the deal.
Well, you have 6 months, which is not that long, to close 10 enterprise deals, including POC, and by the end of the year is not a walk in the park exactly. And these are $500,000 per pop kind of deals per year?
Per year, yes, close to $500,000 is the initial assessment, but depending on how big the patient population is at this hospital, and how much of a readmission rate penalty they have been paying annually is going to be dictated based on that.
Okay.
Yeah, thanks for moving to the next slide. Right now, we have bootstrapped ourselves with friends and family. So the ask is $2 million for this year, and the usage of funds is on 2 areas, primarily R&D and sales, to expand the team to move into more to parallelize the POC process, as well as to engage salespeople to go beyond the West Coast into East Coast and other regions.
Are you already in conversations with investors?
Sorry, can you please repeat that question? I lost you there.
Are you already in conversations with investors?
Yes, we have. We got some interest last year, and early this year we are in conversation with the investors right now.
Okay. All right. And what brings you here?
Sure. Yeah, thanks. So the rest of our team is here, and Dr. Ken, who is our advisor, is a radiologist and has extensive knowledge in the space we are in. And Dr. Madhu, who is our mentor, has been in different industries, biomedical as well as a healthcare practitioner, and the other 2 members are part of our team. Yeah, this is my final slide. Thank you. And the reason I'm here, Shamana, is essentially to get feedback from 1By1M team on our pitch, and as well as get connected with the investor, Mr. Vincent, to get his feedback and see if there's an area of interest. So that's the reason I'm here today. Thank you very much.
Vincent doesn't invest in the category that you're in, so that's not a good fit. But there are other investors. We have many investors in the healthcare IT category who work with us. Why don't you hold on, and I will explain how to use 1Mby1M a little bit later after I listen to the next pitch. Your investor pitch doesn't really work. You need to do quite a bit of work to actually turn this into a convincing investor pitch. If you need help with that, we can help you, but that is something that it's not there yet.
Okay. Thank you.
Yeah. Demba, you're up next.
Hello.
Yes.
I'm Demba Sow, from France. I'm Senegalese, but I have been living here in France since 2015, and
Okay.
I came here for study for my background. So I have a master degree in numerical analysis, a master degree in actuarial science, and a master degree in data science. So currently, I'm working as a data scientist
What's going
in
on
Paris.
behind you? Where is this noise coming from?
Sorry. Oh, hello?
Yes,
Yeah, there is no noise right now.
it's better.
It's
Go
better.
ahead.
Okay, cool. It was a little bit. So yeah, as I said, I'm currently working as a data scientist here in Paris, and today, so I'm gonna pitch on this application Hodi Hodi, which will be on learning languages, learning application for African languages. Next slide, please. Next. So here you can, yeah. So here, this is a summary. What I'm talking about. We're gonna talk about why Hodi Hodi. Next.
What is the target audience? Where are
Yeah,
the customers who would want to learn an African language that you want to teach?
it's on the page, so you will see the target audience in the page. So so Hodi Hodi, it's yeah, go, yeah. So why is Hodi Hodi? The majority in most African country, the official languages are French or English, but the half of the population, the majority of the population, don't understand the official languages. In Senegal, for example, just 38% of the population just understand French, which is the official languages. There is also a lack of access and availability of languages, manual languages. If you want to learn Swahili, it's hard to find some book in Swahili. So this also a problem. So nowadays, so now the problem, the third problem is that constantly nowadays we're living on smartphone and application, mobile application, and the majority of their application, or learning application like Duolingo or Memrise or Babel, who's the big application in the market. They just include one languages and one African languages. That's the problem. So next slide, please. The solution. What? Next slide, please. Okay. So what is Hodi Hodi? Hodi Hodi is will be an application where we're using memo and audio video for learning, and it will be available everywhere you go and accessible, and it will have a self-directed learning and also learning, so like user can find their tutor who can help them progress in a quick way, and we will learn a lot of artistic and cultural works. It covers worldwide the most spoken languages in Africa. Next slide, please. So our target. So here, what we think we're going to use this application is the tourists. It's about 15 million per year tourists in Africa. We think also our audience will be the diaspora. Like here, just in France, it's 2.2 million. So just the African diaspora just here in France. Also the African, because there's a lot of travel. African travel a lot across the continent. So here our target is the tourists, so diaspora and African.
Demba, can I stop you for a moment? I have one comment here.
Okay, go ahead.
You may want to consider whether tourists is the right target audience for you or not. People go to Africa for, 10 days, 2 weeks.
Mm-hmm.
I don't think you're going to be able to make a business out of teaching people languages in this kind of short visit time, in the short visit mode. You need to look at business travelers. For example, there's been a tremendous traffic flow between China and Africa because Chinese companies are investing heavily in Africa, and there's a lot of traffic, business traffic between China and Africa. There is also some amount of business traffic from the UK and Africa, France and Africa, and so on and so forth. So if I were you, I would frame this problem differently and look at the business travelers to Africa who spend more time. They have to go back and forth multiple times, and they spend a lot more time, and they have to interact with people in the local world in a more meaningful way. I think that is a much better positioning for your company than trying to teach languages to tourists. I can tell you, going to Africa, I am not going to spend the time to learn a local language, local African language, and I think that is the general attitude of most tourists.
Okay, so they can't just learn, but they can learn just few languages, few words, just to introduce yourself, just to try to connect, or just few words that can be greetings or anything has. But as you said, but the audiences must be the business from across the from France or America or Chinese, or the investor or some agencies who want to stay in Africa. So that's all. So talking about the market, so Duolingo members are the two applications that have users over 2 million of users. But they only use one African languages in the application. So it also other application like Bringera, Learn Swahili, they got just 2K, not less than 2K user. So here we see they just using lots of applications are monolingual, so they're just using one languages to learn African languages. Like you will see in Learn Swahili, also you can learn Swahili only on English. You can't learn it on. There is no option to learn Swahili for French audience, for example. So the focus is just to get a lot of options for your audience, people who speak English, French, Spanish, and other languages to learn African languages, the most spoken. Next slide, please. So here we see a graphic the market actually of language to app. As I said, there's Memrise and Duolingo have the most user in their application, and we got also other monolanguage African languages. Next slide, please.
I understand what you're trying to do, but I think you have to reframe this problem very, very significantly. Your strategy is not correct. You're going to need to find what is the biggest market, B2B market, business market, where another country, business people from another country is doing business in Africa, and in what African geography is that? Is it a China to Nigeria or China to Uganda, or is it a France to I don't know. I mean, a lot of North Africa actually is French speaking, so the French don't have much problem doing business in French in Morocco or Algeria or Tunisia or Senegal for that matter, right?
Yeah, yeah. The strategy is that even though they are talking French, but a lot of how can I say, a lot of people inside it's just official languages, but a lot of people do not understand French. I mean, the majority of in
No,
the Senegalese people.
so matters. You can't say. That's what I'm saying. This business is not going to work in generics. You have to get very specific and identify what is the largest foreigner community that is doing business in Africa, and where in Africa is that community doing business, and what is the language that they need to learn? Is it a Chinese to an African language that is very active? So you figure out what are the top translation requirements, and you need to focus B2B apps and then acquire customers from those countries which are doing that business in those geographies. So right now your business plan, your go-to-market, your strategy is completely generic, and it's absolutely not going to work this way.
Okay.
Do you understand what I'm saying? Are you clear on what I'm saying?
What I understand is that it is generally, it's not for me. I have to choose Chinese to focus on Chinese or languages who not are not spoken in Africa. So I can choose them hard audience because they're gonna benefit because friends want to need to speak African because there is African French is already spoken in Africa, right? And English also. Well, yeah, but true. That's correct. But in the reality is that even though French is the most official languages in that country, but if you have to interact in the population, it's the majority. They do not understand French. For example, in Tanzania, the most spoken.
When it comes to a business person, a French business person trying to do business in Morocco, for instance, do they need to interact with non-French speaking people, or can they finish doing their business without interacting just with the French speaking people? That is really the question. So I think what you need to study much more carefully is how is business being conducted these days in various parts of Africa, and what are the language requirements of those business people. So you need to frame the problem differently. The way you have framed the problem is not going to help you build a business.
Okay, I understand.
Okay.
Okay.
All right.
So
I think you understand what you're trying to do, and I think I've given you my feedback. You need to think about it and figure out how you want to position this company.
Okay.
Okay?
Okay. Thank you.
All right. Folks, if you like what we are doing here, you're very welcome to refer companies in your friends and family and colleagues network who are looking for help. We give you very candid feedback. I just gave Demba a very candid feedback that what he's doing is not going to work, in my opinion. He can ignore that feedback, but that is the kind of constructive feedback, and I'm even showing him how to make it work. So, of course, that kind of feedback can be threatening, and some entrepreneurs can't take it. But that is who we are. That is 1 million by 1 million. It is not at all, a place where you come to hear that, get a pat in the back and hear that, oh, what you're doing is fantastic and you don't need to do anything differently, everything is perfect. That's not what we are about. So if things are working, great, but they're, in early stage ventures, there's always, a lot of things that need to be done to make things really move at a high velocity pace. So that's where we focus on and help you strategize and build a company the way companies need to be built. And we have had quite a lot of success in doing this and coaching people through this process. So let me show you how to use 1 million by 1 million. I will give you the pointers to the resources, and then I'll answer more questions. If you have questions, I'll be very happy to answer more questions. So go to 1Mby1M.com. Everything soup to nuts about 1 million by 1 million is there. There's a blog series that is completely free, and you can learn by following the blog. The Entrepreneur Journeys book series is a series of 12 case study-based books from which you can learn various different topics of entrepreneurship. These roundtables happen every week. These are free. We are going to do our 490th roundtable next week. Over 150,000 people have attended. So it's something that you can use as much as you wish to. The full acceleration program, where you can get ongoing coaching and mentoring and guidance, as well as introductions to investors, introductions to potential customers, channel partners, media, analysts, etc., and regular interactions with me, and access to our curriculum, is the 1M premium program. So if your primary goal is to get introductions, then join the premium program, and that's the best way for you to access the full range of services from 1 million by 1 million. You could use the 1M self-assessment to take your business plan through the kinds of things investors are looking for. So Sunil, for instance, before you go in front of investors, I suggest you do the self-assessment and see if you can answer all these questions satisfactorily. And this also needs to reflect in your investor pitch. If you get stuck, you can do the curriculum. The 1M basic curriculum only option is just $99 a month. You can also use the curriculum to self-learn and answer these questions and basically learn methodology just through following the curriculum. Either way is fine, but if you want input and interaction, you're going to have to use the premium program. Either way is fine with us. So go to the website. There's a lot of information about what to expect from the premium program, from the basics, FAQs, video FAQs. Dig around. There's an extensive discussion of the curriculum, description of the curriculum, including we have over 100 unicorn case studies, the case study-based curriculum, over 100 case studies of unicorn entrepreneurs, 400 plus venture-funded companies, 400 plus bootstrap companies. It's a case studies and video lectures-based curriculum. Our methodology is lean, capital-efficient bootstrap startups. The philosophy is bootstrap first, raise money later. If you can get to validation, it's a lot easier to raise money. These days, it's almost impossible to raise money without validation. You have to keep that in mind in how you set your expectation and how you journey through the early stages. That's it. We have free roundtables every week right now, 2 more in June and then 5 more in July. So all summer long, we are working pretty regularly and diligently. And we also do these online rendezvous on LinkedIn Live, Facebook Live, and Twitter Live. Those are on Tuesday mornings, 8 a.m. Pacific time. So we have actually 3 more. Maureen, you have a repeat of June 30th. So we have 3 more in June and 4 more in July. So we now are ready for Q&A. If you have questions, I'll be happy to answer questions. At this point, feel free to ask questions either in public chat or dial in to the call-in line and ask your questions. Let me also introduce you to Irina Patterson. If you have questions about the program and whether it would be effective for you or not, or if you have specific questions on how introductions happen and so forth, feel free to contact Irina at 1Mby1M.com. She's on our team, and she'll be very happy to answer your questions. All right. Anybody, questions? No? No one has questions?
Oh, hi, Samana. This is Sunil. I had a question on the on your success rate with startups, and where are these startups now who have attended your premier or monthly sessions, and how much they have invested?
You should go look at the website, and there are plenty of testimonials. We don't publish success rates and stuff like that, but we've had plenty of success. Its program has been around for 10 years. There are lots of people who have gone through it. We service a community of over 500,000 people around the world. There are a lot of people who are learning from for free just by following all the free content that we produce. So you are most welcome to learn for free. Don't have to pay anything. Don't have to join any program, nothing. If you want introductions to our network, that's when you absolutely have to join the program. Or if you want ongoing coaching, you have to join the program. Otherwise, you can learn for free, no problem.
Sure, great. Appreciate it, Samana. Actually, my bad. I was supposed to reframe the question. Is in this situation, in the COVID situation, how are things progressing with the investment side of community as well as the business side? Yeah.
We do have companies going through funding even in the COVID context. We actually published, like one of the companies, you can go on the website and look at, we have a series called Incubation Radar. So before we send out anybody to investors, we do a profile, an Incubation Radar profile of that company, and use that to introduce them to investors. So if you go to the Incubation Radar section of the website, you'll see a company called Tuesday Company. So Tuesday Company is currently in fundraising mode, and we introduced them to, in one afternoon, right after the COVID problem hit. I think it was in end of March or thereabouts. We introduced this company to 26 VCs in the first outreach, and then another 20 VCs or so in the second wave. And the first one, the 26 VCs, out of the 26, I think about 13 to 15 got back to me within the day, within 12 hours. And some of them have engaged, so Michael Luciani is in due diligence process, but the one thing that you have to be aware of is things are going to be slower right now. Because I'll tell you why. Just put yourself in the investor's shoes. Investors have current portfolios, right? We just talked to an investor earlier today, Vincent. He has already invested in a bunch of companies, and he's talked about a company that he has invested in that was doing stuff with Uber. That thing has come to a halt, right? Nobody's taking Uber right now.
Right.
Uber is going through tremendous hell. So investors who have companies that are facing difficulty, as a first priority, will need to save those companies, because otherwise their money will basically be lost, right? So they're going to first and foremost try to save their existing portfolio companies before investing in new companies. So you have to keep that in mind. But I also know several investors in our community have categorically told me that they are looking for good companies to invest in. So, if you decide that you want to work with us, I will, work with you, coach you, and we will come up with a list, with a target list that is good for you based on our process. And then I will send you to those investors, and in one afternoon you could get introduced to 30 investors, but it has to be the right 30 investors who fit your company. Your company has a particular set of characteristics. Just like you're looking for product market fit, you have to find investor entrepreneur fit. The other thing, Sunil, before we are ready to introduce you, you're going to have to do some work with me if you decide to join the program to work on your pitch. Your pitch is not ready to go out to investors, so I'm going to have to work with you to get your pitch ready.
Sure, Samana. Thank you very much for the feedback. I appreciate it. And Yeah, I've attended your previous events as well, and I appreciate all the great content and advice you provide. I do agree with you on refining the pitch further. So look forward to connect with you offline.
Sure, absolutely. You know, we have a very well-oiled machine here. So it will not take me that long to get your pitch to the right stage. If you are willing to put in the time and process the feedback that I will give you, in no time you're going to get to that, but you will have to put in the work to get there.
Sure. Thank you.
Okay. Mufaddal Kanarwala is asking, why did you choose your company name 1M1M? It's 1 million by 1 million. The name of the project, the name of the company, name of the mission, everything is 1 million by 1 million. We want to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. So that's where the name comes from. The mission is built into the name. Anybody else? And of course, we needed a short form version to refer to it and do the URL and so forth. So that's hence 1M by 1M. Anybody else? Any other questions? All right. Well, we'll see you next week. I wish you all well. Be safe, be well, and be careful. The virus is out there. Please do not get into some artificial complacency mode that the virus is gone and we are ready to, roll. We are not. You have to be very, very careful and protect yourselves, your families, your friends, everybody. So maintain social distancing, wash your hands, and wear masks, and please be safe. Bye, everybody. See you soon.